When is the best and the worst time to trade Forex? What's going on, everybody? How you guys doing? My name is Philip Anglade and welcome to fxpronow.com, where our goal is to be able to help you to become a safe yet profitable trader. I get a lot of questions, and some of the questions that I get all the time are, when is the best time to trade Forex? And also, of course, when is the worst time to trade Forex? And what we're gonna do is we're gonna break down those specific questions, and we're starting right now. Now that you know what the history of Forex is, what Forex is as a whole, what is possible in Forex, and what is traded in the Forex market, it is now time that you actually learn when are the different times that trade Forex in general. In this video, I'm going to show you the 4 major markets that you can be able to actually trade in, and when is the best time to actually trade within those markets. Also, I'm going to show you what time is probably not the best time to actually trade. Yes, it is true that the market is open 24 hours a day, but that does not mean that you should trade 24 hours a day. Yes, you can make money when the market goes up, and yes, you can make money when the market goes down. But when the market isn't moving at all, there's hardly any money that you can be able to earn because the market is just going flat. Before we start looking at when is the best time to trade, we have to look at, okay, what does a 24-hour spectrum look like when it comes to the Forex market? So here's the thing, being the fact that I'm in the great country of Miami, oh, you didn't know that Miami was a country? Yeah, it kind of is. If you actually come here, you'll be able to realize why I say that. But either way, being the fact that I'm in the East Coast of the United States, I'm going to break down everything when it comes to the East Coast, New York Standard Time, I guess you would say. Okay? Now, the Forex market is broken up into 4 major markets. When it comes to the Sydney session, the market is actually running from 5 p.m. Eastern Standard Time to 2 a.m. Eastern Standard Time. The next session is actually the Tokyo session. And the Tokyo session from 7 p.m. Eastern Standard Time all the way through till 4 a.m. Eastern Standard Time. The London and the most popular session is from 3 a.m. Eastern Standard Time till 12 p.m. Eastern Standard Time. And the last session is the New York session that's running from 8 a.m. Eastern Standard Time all the way through till 5 p.m. Eastern Standard Time. Now, when it comes to daylight savings time, the Sydney market and the Tokyo market have slightly different times, but it's not really that much of a difference for you to be able to actually tell. And you're gonna realize as we go through this video that those times in the market, they hardly even move, so you probably won't even see the difference. Also, when it comes to a market closing, for example, the New York market closing at 5 p.m. Eastern, that doesn't mean that you can't trade Forex anymore because that market is closed. What's really cool when it comes to the Forex market is being the fact that one market closes, another market opens, you can be able to trade all throughout those times. Now, this is unlike how in the New York Stock Exchange you can only trade from 8 a.m. to 5 p.m. When it comes to Forex, what's really cool is you can be able to trade at any point in time. So I see that as a plus over just trading stocks. I see this as a really great topic. So what I'm going to do is I'm going to create a completely different video talking about the comparisons between Forex and stocks. Also, I'm pretty sure you can be able to see that there's an overlap between the Tokyo market and the London market from 3 a.m. to 4 a.m. and another overlap between the London market and the New York market from 8 a.m. to 12 p.m. Eastern. Since these 2 markets are actually open at the same exact time, what's going to happen is there's going to be more liquidity that's going to be forming between those time frames, being the fact that there's obviously more people in the market at those times. Now, what is liquidity, you're probably asking? Just simply, liquidity is how many traders are actively trading within a certain time frame, and also the total amount of volume of trades that are actually happening within that time frame as well. Does that make sense? So now let's go ahead and actually take a more in-depth look at each of the sessions. And what we're going to do is we're going to start out with the busiest one, my favorite, the London session. Now, when it comes to the London session, just as the Asian participants are, wrapping up their desk and going home, the Londoners are waking up and, probably drinking their tea. Historically, London has been the trade capital of the world. Almost every trader is looking to be able to make their trades within this time. Over 30% of all trades happen within the London market. Since the London session overlaps with Tokyo between 3 a.m. and 4 a.m. Eastern Standard Time, and also overlaps with the New York market between 8 a.m. and 12 p.m. Eastern Standard Time, there's a large amount of trades that are happening at this point in time during the London session. And what does that mean? There's a bunch of money that can be able to be made during this session. Also within this time frame, the brokers actually lower the spreads, making the cost per trade that you do to actually go lower. Later on, we're going to speak about spreads. From my experience, what I've seen is the fact that trends usually start to form right before it, and these trends will typically continue from about 3 a.m. all the way through till 7 or 8 a.m. until the New York market is about to start opening. So being the fact that all those people have got into the market during London, and a lot of them are looking to lock in their profits before New York opens, a lot of them are going to go ahead and close out their trades. Now what does that mean? If the market was going in one direction at one point in time and a lot of people are getting out, what do you think will happen if everybody's closing their trades? It'll tend to draw back a bit. So that's why I've seen from 2 a.m. Eastern Standard Time, the market will start to go in one direction, but then right around 7 or 8 a.m. before New York is about to open, it'll go ahead and actually retrace a bit because a lot of people are getting out of the market. Does that make sense? But that's not always the case. Sometimes in the New York session, a lot of the traders that went to sleep, they probably held their trades, or there's another group of people that see that trend and will continue that trend all the way through till probably about 12 p.m. Eastern Standard Time, which is around the time when the New York session is kind of slowing down a bit, mostly because the London session closes at 12 p.m. completely. So with this indecision whether you should stay in the trade or get out of the trade at 7 a.m. or 8 a.m. when New York is about to open, sometimes it's best to not really have to go through that choppy market and the indecision that everybody around the world is going to be on. So it's best to might as well just get out of that trade at 7 a.m. if that's what you believe is best at that point in time. And just try to not deal with the uncertainty at all. And probably not the entire trade, but probably a portion of the trade itself. Now, during the London session, you're probably wondering, okay, which pairs should I trade? Now, being the fact that almost everybody is in the market at this specific point in time during the London session, I think it's okay that any pair is okay to be traded during this time during the London market. Next, we're going to talk about the New York session. So remember how there's an overlap. So as London is about halfway through during its session, we have New York opening up. It's because of this overlap that a lot of the traders are forming. And if it wasn't for London having that overlap, probably the New York session wouldn't have a lot of traders in. The reason why I say this is because literally right after London closes at 12 p.m. Eastern Standard Time, I want you to know that New York session starts to slow down dramatically. So with that being the case, I'm pretty sure that a lot of people just want to be a part of the London market. Now, just like we said, when it comes to the London market, if the trend is going in one direction at about 8 a.m. and it's staying in that direction, if anything, just hold that trade during the London market and probably close out that trade at 12 p.m. because that's when you will definitely start to see a lot of traders getting out of the market and definitely slowing down. And just like you're going to learn in the You Are the Indicator course, you're going to see the fact that we only follow the trends. We do not do anything other than that. And in the course itself, I'm going to show you exactly how to follow the trends all the way through, like a lot of our people that have gone ahead and actually taken the course have done and will do in the future. Now, when it comes to the New York session, you're probably wondering, okay, what pairs should I trade during this session? Honestly, it could be the same exact pairs that you're trading during the London session you could be able to do in the New York session, because there's still a lot of liquidity that is happening during this time frame. Also, since the USD is the most used currency around the world, you'll start to see movement starting to happen a little bit more with the USD pairs because we're in the New York market. Now, also, when it comes to any news that happens with the USD, being the fact that it's the most used currency around the world, you'll tend to see when USD news comes out, almost every pair is going to have an effect because of that news, but obviously mostly on the US pairs. So right when New York closes at 5 p.m, next what we have is the Australian session or the Sydney session. They're both the same. Now, at 5 p.m. Eastern Standard Time, you're going to see that the market is slow. This is probably not the best time to be in the markets at all. Probably this is the best time that you should be able to do something else. Go pick up your hobby, go be with your family a little bit, go eat something, and just go have some fun. And if anything, probably if you want to be in the markets and if you're just getting home from work or something like that, this is probably the time to just analyze the market itself and see is there anything available at this point in time for later on in the day. And the time that I personally study the market itself is anywhere from 7 p.m. till about 1 a.m. is when I'm looking for something. I probably won't enter at that point in time, but I'll probably start to see a trend starting to form very slowly. And then about 1 a.m. to 2 a.m. is when the London market is about to start to open up, and you'll start to see this going a little quicker, and that's when I'll go ahead and actually enter in my trades. Now you're probably wondering, well, looking at the market from 7 p.m. all the way through 1 a.m., you know, that's a lot of time. No, that's not what I'm saying. What I am saying is this is probably the time frame that you can be able to peek at the market to see if there's anything available. To tell you the truth, it should only take at the most 30 minutes to go ahead and actually look at the markets Now, I'm talking about 30 minutes because I look at 4 different pairs and a couple other things as well. Within that 30 minutes, I'm able to see everything for those 4 pairs and the other things that I'm looking at, and I'm able to find what I'm looking for. So it honestly should take, per pair, anywhere from 5 to 7 minutes to look at the pair, see if there's anything available. If there's not, go ahead and go about your day. And the final session that there is available is the Tokyo market, also called the Japanese market as well. And the only reason why they call it a Tokyo session is because Tokyo is the financial capital of Asia. Now understand, this moves almost just as slow as the Australian market, not as slow, but this is probably not a good time to be trading either way as well. Now understand, Japan is actually the 3rd largest financial market in the world, comprising of about 20% of all forex trade. Now yes, this is a large amount of space that the Japanese market goes ahead and takes up, but it still doesn't move that quickly as much as the London session and the New York session does, but not as slow as the Australian session. So when it comes to the pip movement, which is when it comes to the money movement, it's just not as much as the London or the New York session. Mostly the pairs that move the most during this time are anything dealing with the Japanese yen or the Australian dollar, being the fact that a lot of the people that are in that market are awake during that time. So anything that's going to move is anything that has JPY in it or AUD in it as well. Everything else is pretty dead, being the fact that nobody else is going to be trading something like EUR USD during the Japanese market. Also, most of the action that happens is when the news comes out early in the Japanese market, which is about 7 p.m. But you're gonna realize as you start trading over and over that it's not going to be that much that you're going to be able to find something significant during this time frame. So that's why it's just best to just focus on the London session and the beginning of the New York session. When it comes to the Australian session, when it comes to the Japanese session, it's probably best that you go ahead and just do something else. Go about your day. All right, so now that you know all 4 of the sessions that you can be able to trade in when it comes to Forex, and you know which sessions that are best to trade in, you know which sessions that are not as good to trade in, now what you're probably thinking is, okay, you know, the market is open from Sunday all the way through to Friday, from 5 p.m. Eastern Standard Time Sunday till 5 p.m. Eastern Standard Time on Friday. And you're probably wondering, okay, well, when it comes to the days of the weeks, which days of the weeks are the best days of the weeks to trade in and which are not as great? Well, that's what we're gonna go over right now. So when it comes to Sunday, Sunday opens up at about 5 p.m. Eastern Standard Time. And being the fact that on Sunday at 5 p.m. Eastern Standard Time for London, that's only 9 p.m. The market's not going to open up for them for about 9 or 10 hours later on. So with that being the case, you're not going to see the market flowing at all, because at that point in time, Sunday at 5 p.m. Eastern Standard Time, that's only Australian market. And then right after that is the Japanese market. So you're not going to see a lot of movement at all the way through until Monday morning at about 2 a.m. Eastern Standard Time. That's when the first London market has opened. But the market is still finding its way. What I tend to see is the market starts to find its way probably later on throughout Monday, but definitely by Tuesday. So I'll start looking for my trades on Monday at about, let's say 7 p.m. to 1 a.m. and then start entering in those trades at nighttime on Monday, and then having those trades flow, because on Tuesday is when most of the market has decided on which way the flow of the river, is what I call it, is going to go for the rest of the week. So most of the liquidity is forming on Tuesday, and also most of the volatility is actually forming on Tuesday, because a lot of the people that are kind of impatient have gone ahead and actually entered in the trades on Sunday, and then on Monday more people follow through, and then on Tuesday is when everybody is into the markets, from what I have experienced myself. So Monday night is when I start entering my trades. Tuesday is when the market starts to flow in that direction of the river, is what I call it, or finding a certain trend for the week. And that same trend that has started on Tuesday tends to stay all the way through till about Thursday afternoon, Thursday night. Now why Thursday afternoon? Well, Thursday at 12 p.m. Eastern Standard Time is when Thursday's London's market is closing. So being the fact that Thursday's London market is closing at 12 p.m. Eastern Standard Time, most of them, they're not going to be trading on Friday. So what they're doing is they're closing out their trades. So let's just say, you know, everybody got into a buy on Tuesday. They held that buy all the way through till Thursday at 12 p.m. Eastern. Then all of the buyers are getting out of the market. And if all the buyers are getting out of the market on Thursday at 12 p.m. Eastern Standard Time, what do you think is going to happen? Well, it'll start to reverse. and being the fact that it's starting to reverse, what you'll tend to see is a reverse in the market. So that's why when it comes to Fridays, I'm not really trading, because most times there's an indecision in the market, and also there's just a choppy market when it comes to Friday. So just to wrap that all up together, Sunday I'm not looking at the markets at all. Monday night is when I start to look at the markets to find if something is available. Tuesday morning, 2 a.m. is when the markets start to flow. Thursday it continues to flow, and then from there, Thursday afternoon is when the market starts to slope a little bit, and then Friday is when it starts to retrace because everybody is out of the market. Now, some people they'll probably ask, okay, well, when it comes to Thursday until Friday, well, what about if I hold a trade throughout the weekend? You know, I've done that often, and there hasn't really been too much of a hurt for me doing that. Now, it matters on what your mindset is. It matters if you're looking to, you know, swing the market, or if you're looking to just do an intraday trade. And definitely if you're just doing what we call scalping, just going in and out, you're obviously not going to hold trades throughout the weekend. So essentially it matters on your analysis for that specific trade. If you believe that after the weekend it will actually continue in that direction, then go right ahead. Especially if you're right in the middle of a trade and you're up a good amount of pips and you believe it'll continue going in that direction, then I don't see a problem staying into that trade throughout the weekend. But if you're not really too sure where the market's gonna go, or if the market has just started a new trend, or if it's about to hit your take profit, I would definitely just go right ahead and just close out that trade, because you never know what's gonna happen throughout the weekend. And what I mean by what's gonna happen throughout the weekend, well, the way that this works is probably for us, the market's closed at 5 p.m. Eastern Standard Time on Friday and doesn't open up until Sunday at 5 p.m. Well, it's not closed for the banks. The banks will continue to be able to actually go into their trades and take the money that we put into their banks and actually trade it in the foreign exchange markets and then put it back for you to use on Monday. So that's actually how it works, which is pretty interesting. So with that being the case, obviously if the banks are able to actually trade when we're not trading, there's times where on Friday at 5 p.m. Eastern, price is probably at 114, let's just say. And then from there on Sunday, it opens up at 114.5. And maybe you're up a good amount of pips, but then on Sunday, you're down a couple of pips or something like that. Essentially, what's gonna happen is throughout the weekend, the market's still gonna be able to move. Most times it doesn't move that much, but there are times that you'll see a large gap. So just to keep it safe, if you're just now starting out into the markets, what I do is I actually have an alarm on my phone that goes off at about 3 p.m. Eastern Standard Time on Friday saying close out of all of my trades, and if anything, I give you that advice as well. Now, just to recap everything that we went over. So we've went over all 4 of the market sessions. We've gone over the London session, we've gone over the New York session, the Australian session, and also the Tokyo session as well. We've gone over the fact that the London and the New York session are the most actively traded sessions, and it's probably the best sessions to go ahead and actually trade in and earn your money. We've gone over that the market moves mostly during the overlapped periods, and it's probably best to go ahead and actually trade during those overlapped periods. And what we've gone over as well is the fact that the Asian session and also the Australian session are probably not the best times to trade into the markets, and it's probably the best time to maybe review the next trades that you'll be doing later on throughout the day, or maybe just go ahead and just be with your family a little bit. And we've also gone over when is the best days to go ahead and actually trade. For example, it's probably not great to go ahead and actually enter into the markets once the market just opens up when it comes to Sunday at 5 p.m. Eastern Standard Time. And that goes with anywhere around the world. Just work with the times that I've gone ahead and given you. Now, when it comes to Monday at 2 a.m. Eastern Standard Time is probably the beginning of when you can actually start looking at the markets, but really not starting to look at the markets until probably Monday night, about 10 p.m. till about 1 a.m. when the second London's open will happen on Tuesday. And most likely what will happen is the trend will continue to flow all the way through to about Thursday at 12 p.m., which is the end of Thursday's London session. And with that being the fact that most of the people around the world are out of the market Thursday at 12 p.m., it's probably best that you go ahead and actually close out your trades as well, because what will start to form is a sense of consolidation, a sense of indecision throughout the market, and most likely a reversal in the trends going through Thursday night until Friday as well. Now let me say, when it comes to Friday, there are some times that you'll see the trend continue to going in one direction on that Friday, or you may see a lot of movement going on Friday. And I'm not saying don't trade during these times, I'm just saying this is just something that I don't do. Also, throughout the week, most of the times that I'm actually looking for trades are anywhere from 7 p.m., 10 p.m., all the way through till about 1 a.m. And I'm not saying to look at the market the entire time. That's not what I'm saying at all. It should only take anywhere from 5 to 7, at the most 10 minutes to review one pair and be able to see if there's something available. If you're taking more than that, most likely you're looking too hard into it, which is good, but at the same time could be able to create things that are probably not there. So just get into the market, see if there's something available, take the information that you've learned in the You Are the Indicator course and apply it to what you're going to be able to do throughout the week. And if you find something great, most times, yes, you can enter that trade in right away, but it's probably best to go ahead and actually wait all the way through till about 2 a.m. to actually see if the market is going to flow in that direction. And you'll tend to see the market starts to move a little quicker at 2 a.m. all the way through until 3 a.m. Now, do you have to watch the charts the entire time to see if it's going to do that? No. Mostly what I do is I'll go ahead and see what's available, and then I'll literally just go to sleep. I'll have my alarm set for 2 a.m. Once 2 a.m. forms, I'll go ahead and actually look into the markets again, see if what I saw earlier was good. I'll go ahead and actually enter my trade, set my take profit and my stop loss, and we're going to go over that as we continue. And then from there, go to sleep. And then once I actually wake up, probably about like 6 a.m., 7 a.m., because I don't want the market to start switching on me when New York opens, then I'll go ahead and actually close out my trade. Or if it's going in a great direction and I see a lot of movement in that direction, I'll go ahead and just keep that order in throughout the day. And just to really hammer this in, what's the worst time to trade? Sunday, because the market has just opened up and people haven't really found exactly where the market's going to be going as of yet. Friday, mostly because there's a lot of indecision on Fridays, and most times the market is actually reversing from the trend that it should be going in. Also, holidays. Holidays is probably not a good time to trade. Now, why? Because probably not everybody's like you that wants to be on the charts 24 hours a day. There are a lot of people that are big in the markets that are, what do you think they're doing? Going on holiday, going on vacation, going on trips, experiencing their life. They've already made their money throughout the week in the markets, and now they're going ahead and just enjoying their life. So I would suggest to do the same. Also, and the last one, when it comes to trading and you're just now getting started, if you're looking at major news that may be happening, coming up throughout that week, or throughout that day or throughout that hour, it's probably best to go ahead and close out all of your trades, because you never know in what direction the market may be going, and it may go in the opposite direction of the trend that you're currently in. So if you're just now starting out, make sure if you see major news that's about to happen, for example, like Brexit, it's probably best to not be in the markets at that point in time, because you may see a drastic shift in the market that could be able to hurt your account. So later on, I'm going to be making another video that's going to go specifically on news and how you can be able to actually take advantage of it next time though. Probably one of the most important times not to trade is when you are busy, plain and simple. If you're busy, if you're with the family, if you're out, if you are just doing something, I'd suggest not to be in the markets at all. What I have experienced, yes, it only takes 5 minutes, 7 minutes, 10 minutes to look at an actual chart to see if there's something available. But the thing is, you gotta be focused during that time. And I would suggest not to be trading on your phone, not to be looking at the markets on your phone and entering the markets on your phone. It's best that you look at a laptop. You have to look at a laptop. You have to be completely focused on what you're doing in order for this to work long term, at least. Now, if you're looking for this to just be a hobby, you're just trying to, make money here and there, do your thing. But if you really want to take this thing serious and you really want to become an FX pro, now it's probably best that you go ahead and make sure that you're completely free when it comes to trading the forex markets. Now, after people have heard this talk and I've explained to them all the information when it comes to when to trade and when not to trade in the forex markets, I still see people that are going on the charts all day long. You don't have to do that. Only 5 to 10 minutes per chart is what you would need to be able to look to see if there's something available. Or I still see people trading in and out when it comes to the Sydney or the Tokyo session, and it's probably best to not be trading in and out during that time. Yes, you can be able to analyze the markets and see what may happen in the future throughout that day, but it's probably not best to go ahead and actually trade during that time and just wait until London or New York has opened. So just plain and simply, just follow what you have been taught. Enter your trades at about 2 a.m. and probably close them out at about 7 a.m. And I'm pretty sure throughout that time, the trend should follow in the direction that you already have entered in your trade. So I've learned throughout my career of teaching that the people that ask the most questions are the people that make the most money and learn the most as well. So if anything, if you have any questions at all, go ahead and actually put it into the comment section, and I'll go ahead and actually do my best to answer every single one of them so that you can be able to make sure that all your questions are answered and all your doubts are served. And if you really want to prove that you've learned this content, what I would definitely suggest is go ahead and go into fxpronow.com. That's fxpronow.com, and go ahead and actually take the quiz so you can be able to see if you understood everything that was taught just now. On there, you can be able to actually find all of our content. You can be able to make your own profile, and also if you just finished a video, you step away and come back, you can be able to start off where you left off as well. It's really cool. Also, when you're done with the basics and you really see that Forex is something that you really want to take long term, and you believe that I can be able to help you go where it is that you want to go when it comes to the Forex world, go ahead and actually take the online You Are the Indicator course, and if anything, come in person as well. You can be able to have instant access to professional Forex education, and our goal is to be able to help you become a safe yet profitable trader. People are calling this a game changer for the families. So like I say every single time, pay attention, stay excited, never stop learning. Let's become an FX Pro now, and always remember, you are the indicator. Let's get it. So a lot of them are hey Amy, hi, come. Amy's looking crazy. Say hi. She just woke up from her nap. Hi sign eat. Hi sign drink. Hi sign Amy. That's me. Hi sign book. Okay, you want to eat? Okay. Let's go eat. You had a good nap?